If I'm not using the card, I should just cancel it, or should I? And so there's a few answers. If you're not using the card and there's an annual fee or any kind of fees, then I would go ahead and close it, just because you don't need to pay a fee for no reason. And if there's not a fee though, then I would probably keep it open just for the fact that two reasons. Length of credit history is one. You want to have the account open and active and in good standings as long as you can. But for two, whatever your availability is on that credit card, whether it's $1,000 or $2,000 or $50,000, if you close it, that lowers your overall availability between all your accounts, because your availability goes between every credit account that you have. So if you close one, you're going to lower that, and if you have any debt or any balance, that's going to increase your utilization. So be very smart about keeping an account open or closing it, depending on the scenario. Okay, credit mix. So like I said, if you have multiple accounts, car loan, house loan, credit card, whatever type of credit that you have, that looks better from a lender's perspective. If you only have one credit card or just one car loan, that's okay. It's not a problem at all. But it just looks like you're not as independent as someone that would have 10 different credit accounts. But again, it's not a negative. Some people may view it as the less credit accounts I have, the less debt I have, or the less risk that I have. So there's multiple ways to look at that. Credit inquiries. Okay, this is important because it can affect your credit score. Now, your credit score is what determines if you're approved, declined, and how much interest you're going to have to pay. So it's very important. Now, there's two types of credit inquiries. There's a hard credit inquiry and a soft credit inquiry. A hard credit inquiry is if you're actually applying for credit. So if you're applying for a car loan, a house loan, a credit card, anything that you're actually saying, okay, will you approve me for this loan? That's going to be listed on your credit report for 2 years. A hard credit inquiry can lower your score anywhere from 2 to 10 points. Now, a soft credit inquiry is if you check your own credit personally. So we're going to go to a place here in a second, annualcreditreport.com, where you can check your credit score, check your credit report, absolutely free, and it's a soft credit inquiry. That's not going to affect your score. So you personally can check your own credit score 100 times a day, every day for the next 10 years. It will not affect your score. But if you allow someone else, a dealership, a bank, a credit union, anyone that's going to extend credit to you, that will be on there for 2 years. And that can lower your credit score. Not a lot, but here's the reason why that's important. If you have a credit score of 650 and it takes 640 to be approved for the loan for this car, and you go and you're shopping to get the lowest interest rate, and you have 10 different places check your credit, that could lower your score below 640, and then you're not approved for the loan. So you got to understand where you stand today, how you're going to manage your credit score to benefit you the best. Because it is smart to shop around and get the lowest interest rate, but not at the cost of lowering your credit score and being declined for the loan or paying higher interest. So my suggestion on credit inquiries is mainly with dealerships. You just have to be careful if you're going to use a car dealership for financing, because they might put your information into their database, and then they're going to send that to 10, 20, maybe 50 lenders and let them compete for your interest, for your loan. And you don't want all of them to check your credit. You don't want to have multiple hard credit inquiries. So if you're going to purchase a car, number one, the only thing that really matters way before credit is how much they're going to sell you the car for, and then how much they're going to pay you if you have a trade-in. Those two things should be established before any credit is ever checked. And it's a standard tactic of car salesmen. They want to check your credit, they want to get you approved, they want you to feel obligated to buy the car. Don't fall under that scenario. Know exactly how much you can afford, which goes back to your budget. You know how much you can pay on a monthly basis, and know how much the car is worth. Go to Kelley Blue Book or go to Google and figure that out for yourself, And then don't overpay for a vehicle. Bring a friend with you, bring a family member that will help you walk away from a bad deal. Because a lot of times this happens and people feel pressure. So back to credit inquiries. I would not let a car dealership check my credit until I was ready to make the purchase. And that means I know exactly how much they're going to sell me the car for and exactly how much they're going to pay me for my trade-in. Now, here's a little scenario that you can or don't have to do. But if I was going to go buy a car, I would, let's say I want to buy a Chevrolet Tahoe. I'd go to the Chevrolet dealership and I would say, hey, I'd like to buy your Tahoe. I need the best deal that you can give me. And once they give you that deal, I'd say, okay, I'd like this in writing. So I'd like your finance manager to say, I'll sell you this Tahoe for $45,000, and then have him sign that. And that way it's in black and white and it's official. And then say, thank you for your time, and I'm going to continue shopping, and walk away. Take that deal and go to Ford and say, I'd like to buy your Ford Bronco, something similar to this Tahoe. But I've been offered this deal at Chevrolet, and if you can beat it, then I might give you my business. 9 times out of 10, they're going to beat that deal because car dealerships are it's a high demand business. They need to move vehicles, so they don't want to have a customer walk away. Do the exact same thing. Thank him for his time, take the deal, and then go down the street to Toyota. Continue that cycle until you've saved yourself $2,000, $3,000, $5,000. And then take that best offer, go back to Chevy, go back to the original vehicle that you wanted, and show them the offer that you have from Toyota or Ford or whoever it is that's better, and say, if you can beat this, I'll buy the car. 9 times out of 10, they'll do it. They can't lose business like that. You think about it, as cars are sitting on their parking lot, they're losing value. They're having to pay insurance for those cars. There might be a new model, a new version that's coming out soon. The longer they have those cars, the less valuable they are. So use that to your advantage. Don't go in and buy a car on the first day. Be very, very smart about that. Any questions? Okay? Yes?
Why does checking the credit loan?
That's a good question.
Who done it?
I don't agree. I don't know why. I guess it's just if there's multiple hard credit inquiries, it shows all lenders that the creditor is searching for new loans. If one lender declined it and then we saw that they declined it, it's kind of like a red flag. We would want to know, well, why didn't they approve you? And if you have multiple ones, it might look like there's more red flags. So why are you not being approved at other lending places? And that's why you'll see on any application, have you applied for a loan in the past 6 months, and were you approved? And if so, how much were you approved for in those questions? And a lot of times people will answer no, and then when we pull their credit report, we'll see that they've checked 10 different places for the loan. So be honest about if you're checking credit. And honestly, we want you to be educated. We want you to get the lowest interest rate. It's very smart to have businesses compete for your loan to give you the lowest interest rate, but you just don't have to do that through multiple hard credit inquiries.